Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome to another episode of my podcast. Well, what a day! Basically, for the past week, the U.S. election came to pass, and the American people have spoken. And my bet initial view that Donald Trump somehow scraped past and won his presidency is basically void. And I was wrong. And people have spoken, and it's Joe Biden who actually won the presidency. So this is great news as far as I'm concerned. I personally don't like whatever Donald Trump is doing, not just against China, but against Europeans and Canadians and Mexicans, basically all his friends. The way that it's just going to change, previous administration policies and just jump out from any agreement that the U.S. government made to other people around the world. Basically, I just don't feel that's right. But from my analysis, I just thought there is my view initially was the populism. Basically, he got elected last time, and I think he wasn't really prepared to actually win. Some of the remember some of the old photos down the night. He actually got. The people in America decided that he should be the next U.S. President. Basically, some photo was taken and he was look stunned, don't know what to do, that kind of thing. So he wasn't prepared to actually win. He just want to mouth off Hillary Clinton and didn't expect to win, but he won. And the things that actually do got a lot of quite stirred up quite a bit of people. But also you've seen the if you look at the news from America and from around the world, you probably see that how people in America shows up when some of the rhetoric that he shows up wasn't very nice. But then lots of people come up and vote and things. What strikes me really is that the queues, the people actually wait in line to queue up before the election to early voting and stuff. The lines, the queues like that. It's very much reminiscence of what happened to South Africa when all the black people in South Africa was allowed to vote for the first time during the apartheid era, and they elected basically their own black president. And basically, this is very similar to that as far as I'm concerned. And but it actually shows that how much that he can stir up people and how much support he actually has. And initially, I thought he will continue to stir those people up, and those people get sort of called out in support of him. But his handling of as far as I'm concerned, I'm outside. I'm North American. I live in UK. I'm a British citizen. But from outside here, across the pond, we're looking at it. It's very much. I think he not just his rhetoric that hurt people, but I think mostly is the way they handle the COVID-19 and the Black Lives Matters movement. So there are more divisions within the country. So I think that's he basically shot himself in the foot. And basically Joe Biden comes in more of a conciliatory person and put a country together, which I hope he can. But basically, well done, Joe Biden, and hopefully make the American more a safer place again. And I've been dying to say this, but basically, you are fired, Mr. President Donald Trump. You're gone. So basically, middle of January, Donald Trump is no more. But like I said before, a couple of weeks ago, the stock market will be volatile because we don't really know which way is which. There's a lot of leading indicators say Joe Biden will win, but at the end of the day, a lot of them got the pollings and initial indicator by the communications by news media and stuff. It's got I think relatively quite wrong. Yeah, at the end of the day, Joe Biden win quite a lot more collegial votes and stuff, but I don't think the media in general expect so many people actually come out to fight for Donald Trump and actually kill up and things that the possible violence and then the accusation afterwards as well, that kind of things as well. So the race initially was very close until the last 5 states when Joe Biden basically just won a lot more on those ones. And it basically shows quite, like I said before, how divisive the country is. But the polling is wrong again. The last time they were saying 2014, Hillary Clinton supposed to win, but then Donald Trump comes in, and then the rest is history, of course. And now Joe Biden comes in, even though initially Joe Biden was having a massive lead, but then the lead got reduced much more, and then the lead got up again. But there's a lot of saying here in terms of trading. That's like you and I might have a different opinion about things, but the market is going to show its head whatever this way it can, and it's rather difficult to predict what's the outcome. So in trend following, I just like don't try to predict, and you can see initially I thought because populism raising its ugly head around the world, American also, and basically Donald Trump may have a good chance to get elected. But now I think it's good that America has selected Joe Biden as president. Basically, all he's saying is there's a bigger majority in America with a level head and actually just want to change for the better, not change for the divisive argument and calling people's name and not relying on science, those kind of thing. So it's a good call, American people. Congratulations, very very good. But on the other hand, like I said, the market is going to be volatile. His last couple of weeks has been volatile. So last week, or the week before, the share basically gone down. The pounds basically COVID-19 spreading during the election campaigning, because so many people actually come together in different rallies, and especially the Donald Trump's group that just doesn't wear any mask. Only lately they started to wear some masks, but most of them just don't. Joe Biden's one seems to have a lot more wearing masks and keeping a social distancing and driving meeting, that kind of thing, rather than in-person meeting rallies and stuff for Donald Trump. So people worry about the spread of COVID-19. There's no vaccine. There's problem with the second stimulus package because the political system is basically not putting the socks together and couldn't agree on what should be going forward and getting approved through the government and Senate. And that was basically the scare. And then suddenly on Monday everything reverses because people think Joe Biden's going to win. But initially, I remember, if my memory serves me right, if Donald Trump wins, then it's just go continue, so the market will continue to go up. But if Joe Biden wins, the market was actually saying, Joe Biden was saying, going to charge higher taxes for people who earn $500,000 or something. So the richer population will get taxed, and that was supposed to be not good for the stock market. But then for some reason, the market or commentator and news will turn on the dime to say, okay, it's the other way around now. It's good for Joe Biden to have be a presidency. And then last week you saw the sudden, the week before, the Dow Jones went down like almost 1,800 points or something, and then last week they reversed everything. And then I think the Dow Jones overall is like slightly up than the week before. So we got like more or less 4 days up, and last Friday was a bit of a down day. So on the reverse on the week before was 4 day down, and then one up day on Thursday, I believe, the week before Thursday. So this is how volatile it is. So it really is a day for day traders. People who like to do can pick things in a volatile market, especially in a range. So this is what I used to do, and I still have done it for another account of mine, and that seems to make a bit of money. But our trend following side is not making much because of this volatility. But I was expecting that to happen, so my trade size relatively small. I pick up some money, but not as much as the other account, and that sort of shows. And that basically what I say has been like this volatility is a day traders wet dream, so to speak. I'm sure a lot of people make lots of money last week, and the week before, when the market's gone down, the market gone back up so quick and so sudden. But overall, we're back to where we were, and there's nothing much have changed except we have a change of guard coming in. That's the form of Joe Biden, president-elect, but then President Donald Trump still stuck there and is not agreeing, that he has lost, and whatever he's. You like him or not, he's still the president, and he still have another, I think, 70 days or so to be president of the United States. But I don't know how he was going to handle this transition. Will it be a peaceful transition from Donald Trump's administration into Joe Biden's administration? How do I know? But I think the market next couple months maybe is still going to be volatile until middle of January. I think January 12th or 15th when the Joe Biden basically is sworn in as the 46th president of the United States. But if you look at his age, Joe Biden's age is 77 this year now. So next year when he comes in to office, actually sworn in, he'll be 78. With 4 years term, that's probably, he got to finish his at the end of the when he is a got to be from 82 when the first term finished, and then another 4 years after that, hopefully, and then that's 86. It's already the oldest elected president. And so how is it going to be, for his 2 terms? So I think the vice president, Kamala Harris, I think that's her name, going to be probably have to be, on guard, on duty, ready, be ready for if Joe Biden got a bit sicky or something or couldn't continue. Kamala would probably have to take over, kind of thing. Then that would be making that history, not just the first female vice president, but actually the first colored vice president, and might possibly become the first president of the United States due to ill health of Joe Biden. Who knows? But we just have to wait and see. But I think we just have to see how the market react and everything else. But there's a possibility. Just he's quite old for president. I could be wrong, but I was looking at the sideline. I'm a bit worried myself of the COVID-19 for this Joe Biden, President-elect Joe Biden, because of his old age. But he didn't call anything, unlike Donald Trump. So hopefully. Salute to him, and he'll continue, and good health to him as well, and hopefully can continue to go through this term, 4 years, hopefully another 4 more years. From what I read, he seems to be a considerate guy, and he's been around the block for some times, political terms, and able to put people together. So hopefully they stop all this divisiveness that Donald Trump seems to rise up. But however, this whole thing doesn't solve the main problem, as far as I'm concerned. Why Donald Trump was elected in the first place is the disparity from back in 2007, 2008 to more or less now. There's just the wealth gap. It's just every crisis that happened financially, the wealth gap just expand, and more people losing their jobs or having enough incomes and so forth. The rich get richer, and this is where populism comes in. I mean, just think of the old days back into the World War I, World War II. World War I, German got defeated, and then it was made to pay up a lot of money, just amount, I suppose. And then World War II comes in. Before that, Hitler got elected because effectively, populism rising. People, the lives got really, really bad, and people had to come up with more, German first, that kind of thing, German elite thinking, those kind of stuff, and then started World War II. So it's good that this time we have a population that then voted in a more liberal, level-headed person, at least, that kind of thing, and hopefully the Hitler round 2 doesn't happen at all. But the underlying problem still haven't resolved. The ones that we have and the ones that have not in America and around the world is still huge. That's why I got populism around the world. It's not just America. So we just have to wait and see. With COVID-19 is making this whole thing stand a lot more. People losing their jobs. Economy is standstill. People like to point fingers at each other, U.S. funding to China, and so forth. And it's not good. That's not helping trade. And you got the COVID-19. You got the trade war, that kind of thing. So none of it is good. However, I mean, all of this, as far as I'm concerned, that's what people have been talking about for the whole last month or two. But it's all masked by last week, another big news, upsetting news in the financial world that not many people talk about because everybody's concentrated on the U.S. election. It's the Ant Group. Basically, Alibaba's payment system. I mean, from my understanding and from my research, I probably put a podcast out separately for that. That Ant Group basically cover Alipay and do some insurance, micro lendings, and so forth, so like online Visa temporary lending, that kind of activity, plus asset management. And supposed to go to IPO, I believe it's like 350 billions or something for the price of the whole company, and even bigger than the America, or whatever the name is, for the crude oil company in Saudi Arabia a couple of years back. So it's supposed to all come out and ready and go to be, on stock exchange in Hong Kong as well as Shanghai and China. And then suddenly something happened and the whole IPO stopped. You probably have seen a lot of commentary on YouTube saying this and that, try to explain things. But I think none of it really. I mean, I've been doing that research as well and looking at other YouTubers and all the news and stuff and do some thinking myself. And I just think a lot of people didn't realize that this IPO stopped. Yes, the regulator actually have a last minute meeting with Jack Ma and executive, and the outcome of which is basically stopping the IPO. But people forget what Alibaba actually trading, which I will explain in a future podcast hopefully. But I'm just going to say a little bit of stuff that, like the way that they do lendings and stuff is not regulated fully. And also the assets management, that's it has some like funds that's very popular in China, but you can only invest in those funds if you are Alipay user or register user kind of thing, and you can only buy those funds through Alipay, and that's for like a monopoly as well. And also the way they pay, they lend to small lending to mums and pops and things, people who just need short-term loans, that kind of stuff. They're lending quite well, and they're making lots of money out of that. But unfortunately, they are working that together with the banks, basically just take a couple of percent or like 2 or 3%, and then the rest pass it to the banks, who basically the ultimate underwriter for those things. But it's difficult for the banks to absorb this. It's good business for the banks because the banks don't have to do anything, and basically Alibaba and Alipay, basically in this case Alipay, would just become a salesman for the banks and fed the people using their own internal Sesame Seed credit systems, and just let people have to have the credit and recommend it to the banks and so forth. So it become like a broker, so to speak, for short-term loans for this bank. But ultimately the banks is got to hold on to these customers, and they get paid a lot more interest rate wise. Double-digit percentage interest rate, that kind of thing. But remember, those kind of people are the small size customers, so to speak, people with bad loan credit history with the banks, or very small with little collateral that are banks, traditional banks, that don't even give a look at. The saving grace for Alipay is basically Ant Group is they only offer very small loans and working with the banks and pass the information to the banks and so forth, pass the buck to the banks. But that's exactly what happened to subprime debacle in America, selling mortgages, but rather than mortgages in hundreds of thousands of US dollars, and Ant Group would just divide it into thousands of little micropayments to thousands of people. But ultimately, the banks would just have to still take on those loans through intermediaries through Ant Group, and that is basically create quite a bit of problems for the banks, because ultimately, from the bank regulation point of view, they need to have this what Jack Ma is talking about, the Basel Accord, that in 2010 or something, when Lehman Brothers collapsed, Basel 10 Accord basically past 3 updates, they actually make banks recommend banks have to have a lot more reserve, which in the UK we call it the stress test, just to make sure if another Lehman Brothers things happened 2007, 2008 with subprime market issues, that the banks in the UK can still function, so to speak. So not like Northern Rock in UK got collapsed, and they don't want it to happen around the world. But therefore, the banks need to have more reserve and stuff get put aside. But Alipay and in essence Ant Group, they're not, because they have they try to be called fintech, basically like financial services without actual shops, but everything go online. But the things that they're actually doing is basically stamping on the financial sphere and should be regulated. But in China, this has not been well thought out yet, because there's not true brick and mortar with a shop front, but everything is online. But what they're basically doing, lending, investments, insurance, asset management, that kind of thing, is all in the sphere of financial services, and they need to be regulated. But a lot of people probably, I think Ant Group can continue to work on this gray area because the Chinese government really want to regulate Jack Ma, and I think from my research has been fighting Jack Ma for quite some time, and Jack Ma doesn't want it, doesn't want to have it at all, and he find increasing pressure from the Chinese government to say, your Ant Group um, need to be regulated on all this stuff, and that was the status quo until the IPO, and then the IPO basically forces the hands of the Chinese government, but also the whatever his Jack Ma has been saying, the Bun's business meeting in Shanghai a couple of weeks ago, and say all these things about old guard and new guard, the old way of thinking doesn't work. You cannot use a train station, so to speak, running trains and cars, and try to put that on top of a what you call on an airplane, regulation, that kind of thing. So whatever he says quite angered the Chinese government and the banking industry regulators, and they spilled out quite a field of comments and news media coming out with some rebuff, so to speak, to Jack Ma, and that shows how much he have hurt the old people's views, basically the government's view, that kind of thing. And then they got slammed. But then the most thing people really didn't talk about is because the government is forcing, and I believe that's the case, forcing Alipay, Ant Group, so it's Alipay and stuff, is actually to be regulated. That basically, for example, just like Basel Accord 3, level 3, and you have to have certain level of money in the background to actually continue to provide your services, your financial services. Okay, liquid level, so to speak, whatever you call them in your country. But effectively, from what I understand, Ant Group is working on very thin operating cash flow and stuff. So like instead of 10%, I think believe to each bank, or 12-15% banks need to hold on reserves, Ant Group is actually hold maybe 3, maybe less than 5%, and actually put the regulation on, which let's say everything is fine except Ant Group have to heed to the regulation in China or similar to it around the world kind of level. It basically is operating level. Basically, you will need a lot more money to keep aside just in case people couldn't pay it up, so to speak. And it's basically that changes the IPO's documentation and projections and calculations, because it's all based on Ant Group's recent growth. That's at the moment they are working in a gray area that hasn't been tightly regulated. There's some regulation that apply to Ant Group's activities, but not all of it. But that last meeting just before IPO basically is a big slam. More or less, some people are saying in Asia is putting a gun on Jack Ma's head to say you either do this or you can lose the company, or the whole thing stops or whatever, some sort of threat from the government. And then Jack Ma has basically backed down, and therefore the IPO was stopped because the regulation, and basically simply also mean because projection, all of that is wrong. The backers, the underwriters of the IPOs have to, fiduciary responsibility to change this documentation to have a proper projection, and therefore whatever, I think in Hong Kong they was talking about 80 Hong Kong dollars per shares or something at the top end of their initial estimate, that all of that has to change, and with the IPO coming in so quickly, and then they don't even know what type of regulations, how it's going to work and how it's going to affect the model of the Ant Group working model and so forth. And the whole thing basically got called off. It hurt Ant Group a lot. Obviously, it's Ant Group who was calling off the IPO because pressure from the Chinese government because of the regulation and stuff. Maybe there's some other thing as well. Forces the IPO to stop. So Ant Group called off the IPO, but Ant Group have to pay all these advisors. They're going to make some money by the advising, and underwriting the IPOs. But I'm sure there's some sort of clause to say, if this whole thing gone belly up, this IPO gone belly up, and Ant Group have to pay, this big lump of money to these 8 banks or something. I think there's 8 of them. 3 of them are US based. I think one of them is Citigroup or something. Which I said in the previous podcast before already. But basically, it's going to hurt Ant Group as well, and also a quite big debacle. I think lose face for Jack Ma, definitely. I mean, Jack Ma has always been obedience to the Chinese government, but I'm not quite sure if anybody knows that. Well, he he was in charge of Alibaba, and then being stepped down. He say just take time off and so forth. But basically, from what the Chinese commentator has been saying is because Alibaba has gone up so big that Chinese government really want to take main control of it, and then Jack Ma was more or less forced out. As part of that deal was basically let Jack Ma to have a separate company set up, Ant Group. Before it's called Ant Financial or something, financial services. But which basically Alibaba just give the intellectual property, the whole setup of the Alipay to Ant Groups, and then Alibaba take a percentage of the Ant Group, I think 35%, 33%. So that was the setup. So the talks in Asia is basically Jack Ma give up the Alibaba main control to the government, and then and he basically go run on the side with this separate company called Ant Financial. But Alipay has been doing really well, and then also it starts doing lendings and stuff like that. I remember there's like over 730 million people actually using worldwide, or in China anyway. A lot of people actually using it. It's the major online payment system that actually used in China. So it got a lot of major advantage, so to speak, and got a lot of customers, and so that sort of helped it to let out this small micro lendings and so forth, and assets management and thing insurance. But slowly over time, because it's getting bigger and bigger, it come to the point that Alibaba it's come to Ant Group is coming to similar size to Alibaba, and the Chinese government basically want to take control of it. And of course, Jack Ma knows about it. Jack Ma, of course, have been try to reject that advances, but basically he cannot really go against what the Chinese government is saying. Therefore, the outburst, if you say, on the Bun's business meeting a couple of weeks ago in Shanghai, in China. Basically, he's disquiet, his anger of the Chinese government using old regulations, to put on top of his company, which is a new technology company. But overall, it's still a financial services. I understand and share the frustration of Jack Ma, but unfortunately, you need to be, if you work on the financial environment, you need to be regulated. And however you don't like it, the regulation have to come, because at the end of the day, the Chinese government wants stability in the in China. It doesn't want people just bet too much on the shares market, because last time when they did, every time in the before Xi Jinping actually got become the president of China, there's a lot of that going on, and a lot of people lose a lot of money and lost faith. A lot of money are corruption money, that kind of thing. And Xi Jinping basically has put a big foot down to stop all this corruptions and stuff. So that's where they're basically coming from. And also, this I'm sure the stop the IPOs, the regulatory review meeting, because I'm sure in the background, Jack Ma, the way that he's built up Alibaba and also Ant Group, he must have some powerful backers who have basically helped him to become this big. Because everything, without more or less one way or another backing of Chinese government, I don't think any company, homegrown or not, can without the Chinese company government blessing, can become so big. And so I think there's a lot of to be said that this IPO stopped straight after the meeting. With I think they do a 5 years plan meeting in China with the Communist Party, and which basically get a view a schedule what China want to the next 5 years. It comes this IPO review meeting that happens a couple of days before the IPO actually came after that 5 years planning meeting at the end of October, and that basically says a lot of what you call, the government has finally put its foot down, so to speak, and basically say, okay, that's they need to regulate Ant Group basically, and then basically that sort of changes the IPO structures, and then therefore the price of the IPOs. And if the IPO hasn't been stopped, then people might get sued. The underwriter may get sued because of the material change basically the Chinese government is forcing regulations onto Ant Group's operations model, and that changes the whole structure of the the operation, the landscape for Ant Group, and then it's for the price of $80 or whatever Hong Kong dollars per share is far too high. It probably come down to down to like maybe half of that, maybe $50 instead of $80, that kind of thing, and therefore the underwriters couldn't stomach it, and it doesn't want to get sued either, and so the whole thing got pulled, and which is fair, but I think a lot of people underestimate, especially the West, doesn't understand how China sort of works. There's also a lot of infighting with the Chinese government, and you got to remember who is the backers of Alibaba, and who is the backer of Ant Groups. Those are some people with very powerful political influence, and I sort of guess, it's probably something with to do with the old ex presidents of China that have some hands or their friends or relatives or something anyway. But then the Xi Jinping actually want to put a stop at that, stop the influence from the old guard, so to speak, the old ex-leaders to influencing the economics movement, growth of the country, but also have a bit more stability of Chinese economy and so forth. So that's how it is. But the West don't seem to get that point and just think whatever, more that on the surface. That's basically my 2 cents worth. I put out a podcast hopefully next week maybe. I'm just still doing analysis, but I see where the frustration Jack Ma is coming from. But at the end of the day, without the Chinese government blessing, anything could happen, and you also voice your Jack Ma voices frustration out so loudly, then it's reported around the world. Jack Ma didn't give the Chinese government any face, so therefore just big slam down by the Chinese government. But there's reason for it, and that's how I think it is, and that's my 2 cents worth basically. So next will be my update on my portfolio. Okay, first off the bat is Apple. Like I said earlier in the podcast, basically it's changing the volatility. So the week before was down, and this week suddenly gone back up again. So there's basically a change to Apple. Short terms become buy now, and medium term is still neutral. Long terms also changed to buy, and basically that just show you how volatile the market is. One week everything is down, and then next week everything is up. So this is what we call in trend following terms and financial terms is called whipsaw. 1 minute you're up, 1 minute you're down, and then your rules just keep on taking you out of the stock market or the stock that you're actually holding because of your rules, and mainly because of volatility is up and down. 1 minute is up, 1 minute is down. So it's very difficult for trend following to follow through, but this is why you need to keep your trading size down and only add on perioding when actually the share is going in the direction that is in your favor basically. So that's what happened. But I did warn every one of you who have been listening to my podcast that it's going to be volatility for a couple of months. I think probably until January, I said earlier. So similar things for Amazon. Basically, this week is a big change. So last week, it's basically all gone down, and there's a big sell off, and then this week basically a big recovery. So everything's suddenly gone back up buy. So Amazon is similar to Apple. Short term is a buy, medium term is neutral, long term is a buy. USD against the Australian dollar against USD. Short term now also changed to buy, medium term is neutral, long term is a buy. And this also last week is while all this hoo-ha is going on with the US elections and stuff, which is rightly so, the US dollar index has quietly changed sign. I mean, the week before, it actually, when the stock market in general has gone down, the US dollar index went up to like 93.5, 94 area, but for the last 5 days or so, it's basically dropped down to about 92.5 at the moment. So, and then currencies, the cross pairs, Australian dollars and Chinese dollars or Japanese yen and so forth, all gone up. Because just simply because exchange rate difference. So my guess is when the dust settles, in the U.S. government, Joe Biden actually coming in later on, and maybe hopefully before that, there probably the stimulus package coming in. People are talking about before the actual election date itself is $2 trillion in the works at the moment. to be agreed by both Democrats and Republicans, and that probably put another what at the moment, as far as I understand, is 7 trillion of U.S. Fed on the balance sheet, on the U.S. Fed's balance sheet, and that's in the deficit, and put another 2 trillion down. That'll be 9 trillion. By end of the year, maybe early part of next year when the stimulus package up. That's really put a lot of pressure on the U.S. dollar. Remember last time when it was like 3 or 4 trillion back in 2008, and then slowly, just gone back up. Over the last 10 years or so to now to this level. It's just way too much. That's definitely going to put a lot of pressure on U.S. dollars. So we just have to wait and see. Next is Brent crude. It basically on this one is the Brent crude. Short term has become a buy, medium term is neutral, long term is a sell still. Crude oil as well, short term is a buy, medium term is neutral, long term is a sell. So essentially, Brent crude is still drag it back, so to speak, still sort of delayed, not moving up higher, above, still having problem stay above the 200-day moving average. But I don't think it's going to be long, because if my analysis is correct, the U.S. dollars is going to weakens, and anything that is rated in U.S. dollars terms or price in U.S. dollar terms in this place, it's going to be go up straight up, and I think next year, given hopefully the vaccine comes in, and God bless the world and the health authority, please have the vaccine ready for people overall to use in various different countries using different vaccines. So I think next year the traveling will slowly pick up, and therefore people, not just cars, but I mean planes as well, and shipping probably moving back and forth, that'll be better. I'm hoping that Joe Biden's was coming into the U.S. presidency will have a more conciliatory relationship with China. He probably still want to poke at China every so often here and there, but a little bit more, less fierce, so to speak, and still able to talk to each other, kind of thing. So still enable trade going through, maybe in the whole file some of the trade, or relaxing a bit. So probably I think it will be good for crude oil as well. So at the moment it's still under 22 moving average, but we just have to wait and see. Same thing for WTI. The U.S. crude oil, basically short term is a buy, medium term is neutral, long term is a sell. So we just have to wait and see, guys. Next is DAX. Short term is a buy, medium term, long term is neutral. So DAX and European countries as well as Asia indices, Asian countries and so forth, all following what Americans have done last week, all gone up. So short term for DAX is a buy, medium term, long term is still neutral. Next is Dow Jones. Basically short term change from last week's sell to this week buy, medium term still neutral, change to neutral, long term is buy now. So we just wait and see. FTSE 100 in UK, short term again change to buy, medium term is sell, long term is neutral. Next is gold. Basically, short term is a buy, medium term is neutral, long term is a buy. So gold seems to be doing some funny things here now. So previously people think when the stock market goes down, gold price go up. But this time, for 2 weeks ago, when the stock market go down, tank in America, the gold price actually went down. And now the recovery for the past 5 days also see the gold price recover, and then some. It's gone above the 1950 marks. So basically, I think it's poised for some more actions, and I'm hoping, like I said earlier, sounds like a broken record, the weakness of the U.S. dollar, because it push everything out. So gold probably will go up as well. We just had to watch this space. So I think next year really you see the sparkle of gold. I already said early in the year that gold this year is definitely make some movement, and sustain gold. I think next year probably be more. We just have to see how things are. And next is Hang Seng Index from Hong Kong. Short term is a buy, medium term, and long term is also a buy. So basically across the board is a buy. Nasdaq, it's a buy, short term, medium term is neutral, long term is a buy. Nikkei 225 in Japan, short term, medium, long term is also a buy. So you can see from last week how down or neutral, suddenly everything all turned to buys across the board. Next is silver, similar to gold. Short term is a buy, medium term is neutral, long term is a buy as well. So when gold moves, I think silver at this time also moves quite fast as well. So we just have to wait and see. I think for if my dollars is put my dollars on the one thing for next year, next 18 months or so, the only thing I'll put down is either gold or silver. I probably put down both 50-50 on each one, but I wouldn't do anything else because I think maybe the other things I maybe put some money on is probably the crude oil as well. But watch out, anything that rated and calculated US dollar will go up, and we just wait and see. Next is US dollar against Chinese dollar, Chinese yuan. Sell across both short term, medium term, and long term is sale. I mean, the Chinese dollars is basically going up, gaining strength. US dollars coming down. Same thing for Japanese yen, US dollar again, Japanese yen sales across the board, short, medium, long term. It's all sell. That again means the strength of Japanese yen is getting better and it's getting stronger, and US dollar is coming down. Next is British pound against Japanese yen. Buy for short term, medium term is neutral, long term is also neutral. So overall is still same as last week. Next is British pound against US dollar. Short term is a buy, medium is neutral, long term is a buy. The British pound against US dollar seems to be better, show better strength than British pound against Japanese yen. And so this is what I say. US dollar is weakening, so anything that's compared to US dollar is going up, but British pound and Japanese yen both looking at each other is very much relatively neutral. So that's what I'm saying. Next is Bitcoin. Buy across the board, same as last 3 weeks or so. Short term, medium term, long term is a buy, and this time it's broke above 15,000 mark. So like I said, we see some action now. Now it's excessive like gold and silver. So this is the type of thing, you expect gold to be like similar to silver before, or gold, Bitcoin, to be like silver and gold, but it didn't do anything, and then suddenly now just move them in tandem. So this is why I'm saying each individual shares or currencies across you trade, just trade on its own merit. There might be some relationship there, but each one seems to have its own volatilities, its own characteristics, and all because behind the scene, there's certain type of people do certain type of trades in those areas, and it's always those type of people, and they might have different agendas and move slightly differently. So the index people or people in the index might move things around differently than the forex people or the share people or commodity people. But doesn't mean that they don't move, but they move slightly differently, different rates. Sometimes they do, other time doesn't seems to be. The problem is I don't know when they change their mind. So rather than guessing a double guess, which you have seen, I guess Donald Trump is going to be reelected and Joe Biden's get a miss again. But no, the market actually, America actually spoken and say no, they want Joe Biden. So my guess wrong. So your guess is as good as mine is, just probably prone to errors. So in this case, follow your rules, always follow your rules. And this for Bitcoin is follow your rules and you're making money, which is good. But sometimes you might not. That's just the nature of the games. But stick to your rules. That is always the bottom line. Next is iShare 20 TLT ETF. Short term is a buy, medium term is neutral, long term is a sell. This one to be volatile at the moment, up and down. It's just like Dow Jones, but it does show. So it shows a bit better characteristic now that when the stock market is up, the bonds markets come down, a bit, which is fair. But last couple of weeks wasn't doing that. It was like everything is down, so something's fishy going on. But now at least it's back on track. But again, I said earlier, that pattern might change anytime, so always stick with your rules. Last but not least is Tesla. Buy for short term, medium term, neutral, long term is a buy. That's basically it. It's just so so volatile the last couple of weeks. Up on the week 2,000, down on the week almost 2,000 last week, and who knows what happened next week? It's just going on. But one thing for sure though, what I'm really worried about is with the presidency election sort of more or less finished now, except just waiting for a final count and some more Donald Trump's legal wingles try to get some more vote on himself. But it looks very much like Joe Biden is going to be the next president of the United States. But all this gathering of people for the election is spreading virus around, irrespective, how much Joe Biden's team has been trying to stop, put in place with things, with your social distancing and stuff. You cannot really stop the virus. He's going to do his things and it's carrying on by the airs and stuff or so forth. So I'm afraid, guys, in America, it's going to be just like UK here and Europe. The spread of coronavirus just go to no ends, and with especially people gathering the last couple of weeks in big gathering like this is just not going to help the COVID-19, stopping the reach, the spread of COVID-19 in America. So I expect a lot more, unfortunately, more death in US, as well as more detection of those things. But I'm just hoping that there's more vaccine coming through quickly. But without a vaccine, people cannot really go back to work in a more proper, consistent, longer way. And the government still have to put more stimulus in the package into people's pocket to basically just, take them along, so to speak, and the whole thing go tumbling down. As far as I'm concerned, even the vaccines coming through, I see one thing. Basically, people start coming out to work. They have to start picking up the pieces. When you start picking up the pieces, that's when the worst time comes. So next year, Joe Biden, initially I thought, President Donald Trump just go to eat your medicine, you make a mess out of things, and he had to put things right. Now, Joe Biden, the president-elect America, has the unenvy and very difficult task of trying to put things back in place together in America. It's going to be a tough job. So I basically see next year, and next couple of years, basically, it'll be similar to 2017, 2018 in a much, bigger sense, much worse, a lot more people out of jobs. Yeah, because it's not just banking industry issue. This is a general economy issues, and around the world is having a similar issue because of COVID-19. And it's not going to be easy. And I think one thing definitely certain is U.S. dollar weakness. That means there's more inflation coming on board in America and around the world. And with the productivity in Europe grinding to halt, and China and Asia countries are putting back up again. So you basically see the difference between the U.S. Trade deficit between U.S. and China is just going to increase, because basically America haven't been exporting as much because a lot of the places still, not fully functional, so to speak, but Asia is just putting up. So basically, be it a tale of two cities. You see Asia going up, Europe is recovering, or America is coming down, still trying to recover. And that's just how it's going to be next year. But basically, that's the end of my podcast, and congratulations, President-elect Joe Biden, and hopefully we'll have a better president for the next 4 years. And that's the end of my podcast, and I'll speak to you next week. Bye for now.